Good morning, everybody. Happy PCE Day. Inflation report just came in, hotter than expected. So the greatest rug pull operation by the Fed continues with Jay Powell pitching the disinflation narrative at the last February meeting on February 1st, and now we're getting the exact opposite. So if we go to investing.com and the economic calendar, the inflation report came in higher than expected, with core PCE up 0.6% month over month versus 0.4% expected, and this is up from last month's 0.4%. So month over month reading went up. And then looking even at the year-over-year reading, this went up too. This was expected to come in at 4.3. It actually came in at 4.7, and the expected was last month was 4.6. So the year-over-year reading actually went up from December to January. So the disinflation narrative is dead with this inflation report. And if we scroll through the rest of the PCE index, just the regular PCE came in at 5.4 versus 5.3 last month. Again, higher than it was last month. 5.0 expected. And then the month-over-month reading came in at 0.6, just like the core. Expected was 0.5, and the previous was 0.2. Again, the disinflation narrative is dead. So the rug pull operation by the Fed continues today. Currently, SPY is trading at $295. That would be abysmal. $395.41. Ended up low at the lows of $395.05, lower than it was yesterday, lower than the day before. So this is a new weekly low. And personally, I ended up taking a bearish trade on this. So lucky me, I get to take profits on this call credit spread that I had opened yesterday, assuming SPY would stay below $404. Right now it's trading at $395, so these are basically worthless at this point, trading at 2 cents a piece, 3 cents a piece at the ask price. Need to continue to watch Nvidia. I do have a short trade against Nvidia, assuming that it's going to go below 230. Right now, it's still holding up at 233. If we do get a bounce on the market open, this might put this trade in danger. But SPY currently trading at 395. I would expect maybe a little bit of a bounce, maybe as high as like 396.50, 397. Don't have my support or resistance levels up yet. But 397 would be an interesting mark to watch, just based on the PCE report and the huge flush down that we got right on the release of it. The average price between the open and close looks to be about 397, so I would imagine that would be a resistance later on, since that's a candle of significance. We did get a little bit of a bounce off of 396, so that might be a resistance level for later on. But right now, trading at 395. And low change, 34 cents. So we'll have to keep watching, see if we hit a new low or if we end up bouncing on the open here. Let's check out QQQ. Currently trading at 291, so definitely losing its 300 mark. And if we go through the fundamentals watch list, the dollar is up a shit ton today, 0.7%. A new high for the dollar over the last couple of days, at least. The 10-year Treasury rate is making its way back up to the highs, even after dropping as low as 3.86 yesterday. It closed at 3.88, and now it's at 3.963. So if this one heads to a new high, and I think if it heads above 4, this could really put us in trouble with the growth market, especially QQQ, tech. Goes with growth, I guess. And SPY, I think SPY is priced almost right for this week. I think that we already priced in the high inflation report to some degree. I don't think that the market's priced in the chances of the year-over-year reading come in higher than it was last month. That shocked me. My expectations for PCE was coming in at 0.5% month over month, and I didn't have a year-over-year reading estimate, but my expectations was 0.5% month over month. And the issue is that inflation is going to be even worse in the next month's reading for the CPI and the PCE. It's coming out for next month. And the reason for that is because the Producers Price Index, or the PPI, came in hotter than expected. So the producers are paying more in order to produce goods, which means that that extra cost is going to be passed down to the consumer in the CPI report. So you're probably going to see a higher reading than expected next month too. So overall, inflation is certainly back, and the Fed might just have to go back to 50 basis points. If we look over at the investing.com, actually, we can go to the Fed FOMC watch tool. The odds of 50 basis points for the next March meeting on the 22nd, I want to say. Yeah, March 22nd has gone to 36%. 36. This is almost 40%. Yesterday, this was at 27%, so this is another 9% climb for the 50 basis points, and this is up from a week ago at 18%. So the odds of 50 basis points have doubled over the course of the last week. So that's why you're seeing interest rates rising with the 10-year near the highs yesterday in the pre-market. And if those odds continue to climb, that just makes the Fed look all that much more incompetent after going from 25 basis points last month. Going back to 50 would be a really big hit to their ego. But, you know, the Fed gets it wrong quite a bit, it seems like. Bounce exactly off the mother of all trend lines. Yeah, I forgot about the mother of all trend lines. The algos might buy it up whenever it hits that. Wouldn't be too shocking there. Nvidia's trading at 233, so still not at the mark that we needed. But let's see. 462.07 was our high. And then we'll draw this down. Oh, wait. I think it was on the weekly chart rather than the daily chart is where I had it. Yeah, that looks a lot cleaner. So take the 479.98 high. You could also use the close of it. Some people prefer that, but yeah, you have the mother of all trend lines here. This will be pretty rough, but it's still a little bit below where we're at right now. Unless you draw it right here, which is a little bit closer. And that's based on these three highs. 1, 2, 3 highs. We did end up breaking it this week, but then ended up dumping right after. So now we're coming closer to it. SPY's trading at 395 in order to reach the mother of all trend lines today. I would imagine that would be pretty unlikely. But if it does happen, it would have to come all the way down to roughly $392. Cash secure put for Google next month, 84.85 strike price. Let's see. Googs. Oof. This one's almost at a yearly low. That's wildin'. I don't know. I wouldn't want to put my money in growth or tech right now, personally. But, you know, that's just me. I would rather put my money in staples. Although, you know, I ended up getting burned on Walmart for this month. Unfortunately, I was assuming that it would stay above 145 with their latest earnings report, and they are dumping to the bottom of the risk range even after a good earnings report. So maybe they could catch a bid at that 138 level. That should act as a decent support, but everything is just kind of tracking with SPY and falling like hell today. Walmart down 1.5%. Nvidia still only down 1.4%, shockingly. And then Moderna even is down 4% after their... It was a pretty bad earnings report, I think. 361 earnings per share versus 465 expected, so less people getting the jab means that they can't earn as much money. I think their revenue came in like at expectations or like slightly below. But yeah, they're definitely losing earnings power, which is really interesting considering this is a government contracted company that's making profits from that, but it is what it is. The blue bars on the chart is a volume. Yes, that is my volume on the bottom that you're seeing. Could you cover the Walmart put credit spread, or is it not worth rolling? In my opinion, I don't think that it's worth rolling. You could always, roll to a lower strike price, a later expiration date. But with the uncertainty on inflation picking back up in the next CPI report, I would be too worried to open any long positions for right now, I would say. Let's see. SPY's been making its way back up to 396. I would be okay maybe with opening some long positions on Walmart closer to that 138 mark. Maybe if we come down to the bottom end of the risk range at 139 instead of 140, you would get a little bit of a better price, but you're getting pretty close to it, I guess, to where you could roll it over. Personally, I've never been a fan of rolling myself. I mostly trade just based on earnings reports or just based on incoming economic data. So rolling doesn't really make sense for me. I'd rather put the money into a different opportunity than reuse the same money on the same opportunity. But that's just my stance on it. Morning Wizards. Let's snag Intel today. What is Intel doing? Intel, INTC. Jesus Christ, this one's at a yearly low too. How is Intel at a yearly low and Nvidia is trading so freaking high? Ugh. What an annoying stock. Let's watch the fundamentals again. 3.95 for the 10-year, so this is pulling back a little bit. Dollar index is still sitting at 105, up 0.5%, and then the VIX is up 5%. I'm shocked that the VIX isn't up higher with this inflation report, but 5% isn't anything to scoff at. I would just imagine that this would be like 23 and above, but you do also have the suppression of the VIX thanks to the zero data expiration options. Us gamblers are screwing up the fundamentals of the market. But let's see, this 404, 405 call credit spread is basically at max profit. They're trading at 3 cents a piece at the ask. I'm not willing to pay them. I guess it's only $9. I'd rather get them out at 2, but if I have to, I might just end up getting out at 3. Very doubtful that we go up 2% between now and end of day, considering this earning or inflation report. Let's see if there's any news. What options am I looking to get into right now? Not looking to get into any right now. I've already opened all the trades that I wanted for the inflation report, but I will review some of the trades that I still have open. So I lost on, oh wow, the Nvidia put debit spread is actually gaining a little bit of value now. I might be able to break even or make a profit here. Let's hope for it. Ended up losing money, max loss on the call credit spread. Put debit spread that I opened a month ago is definitely at max loss. I was assuming that it would go all the way down to 190. Obviously, we're far from that mark. Got the 404, 405 call credit spreads that are basically at max profit at this point, so I could take profits now. The Walmart put debit spreads or put credit spreads are at max loss. UVXI call, so I sold cover calls on UVXI. I own 400 shares. That is up. The cover calls are up $26. I could close out of these. I think that the VIX could go higher, but going all the way to 850 for VIX seems, or UVXI I should say, seems very unlikely. But yeah, I have 400 shares of UVixi that I bought at an average of 719. I might even honestly add more, but I do have leverage to the downside already with another put debit spread that I opened for SPY, assuming that it's going to be below 395 by March 24th. So I think I'm probably going to hold this until the next inflation report because I think it's going to come in hotter based on the producer price index coming in hotter than expected. So this one I might just keep holding on to. Right now they're trading at 43. I ended up opening them at 28 last week. They're currently up $128. But yeah, sitting pretty on those. I think I got those at a really good value, actually. Still waiting on this damn 404, 405 spread to be 2 cents at the ask, but what do I think of Beyond? Oof. Beyond. BYND. Call credit spreads. So they had their earnings report yesterday, and they're rallying 21%, even with the rest of the market crashing. So the earnings per share came in slightly better than expected at negative 105 versus negative 113 estimated. This one seems very troublesome. And then let's look at their revenue. Their revenue might have come in better than expected too, which might end up boosting their stock. You got a lot of analysts raising their price targets. Mizuho raised it from $11 to $20, and now it's trading at $20, so they look like a genius. Beyond Meat falls 21%. Sales fall 21% on discounted products. Jesus Christ. That's not good. I'm trying to find where their revenue and their earnings per share reports were. 105 loss on earnings per share, and then revenue ended up coming in at I might have to go to their website. Revenue ended up coming in, nope, that's the expected revenue. Okay. This company is only making $400 million a year. That's concerning. All right, so let's go over to their investor relations page. See what's going on here. SPY just ended up crossing below 395. Again, we're looking at 392 for the mother of all trend lines, but we're still a little bit of ways away from it. So we'll go to the Beyond Investor Relations page and see how bad this report really was. Cisco Systems, I think Cisco System is, maybe I'm thinking of a different Cisco. Maybe it's SYSCO instead of CISCO. No. Yeah, so this is a wholesale restaurant food distributor. So I guess I was thinking of a different. So Cisco, CISCO, is a marketing cloud networking company, so a technology-based company. So yeah, my bad on that. I did not realize that those were two separate entities. But yeah, CSCO, considering it's a tech company, let's look at their earnings per share, 88 cents, 86 cents. So the earnings per share is still holding up. So that's what you want to see out of a company. But you need to consider if it's share buybacks, employee stock compensation, or if they're actually earning money. So we'll review that after we go through this Beyond Meat earnings. Yeah, Cisco. SYSCO is what I thought it was. Beyond Meat conference call. That's not what I need. News releases, fourth quarter report, full year financial 2022 results. Net revenues $79 million, decrease of 20% year over year. Gross profit was a loss, Why would they state it as that? Gross profit was a loss. Why don't you just say net loss was X? But okay. Let's see what the numbers came in at. Net revenues for 3 months ended December 2022. I want to look at the quarter results. Oh, yeah, this is 3 months ended. So revenues came in at $79 million versus last year $101 million almost. So a 20% drop in revenues. This is how much they sold in pounds, which isn't really relevant information. You want to see how much money they made, not how much product in pounds they sold. So I feel like that's pretty irrelevant. I guess you could base that on like their margin. So if the price per pound is going down, that means they're getting less margin out of their products. So that might be a little bit important, but go to their cash flow statement if they have it posted here. This is a statement of operations, net revenues, earnings per share negative 105. Last year they lost 127. I'm assuming this is probably a non-GAAP basis, but we'll have to see. So net loss ended up coming in at negative $336 million for 2022. They used $320 million in operating activities overall. Cash from investing activities was negative $87 million. And then cash at the beginning and end of the period, so beginning of 2022, they had $733 million in cash left, and now they only have $322 million. And the business itself, again, is losing over $300 million, $366 million a year. So this means that this company isn't going to be around for another year if they continue to spend at the same rate that they are. So this is basically a zombie company is what you would call it. But their stock is up 20% after their latest reports. So that's not exactly a good place to put your money, but hey, retail will buy up anything sometimes. So let's see. Beyond, BYND. Yeah, it's trading at 22, up 25% today. Let's see what their market cap is. BYND. Crypto is still holding strong still. I think the reason why crypto is holding strong is because the central banks continue to fail us time and time again. They're losing credibility. And if they lose credibility, the dollar loses value overall because our value that we give the dollar is based on our trust with the government and the entities that are printing the money. So if we lose trust in those couple of entities, where else are you going to put your money if the dollar is continuing to lose value? Crypto, decentralized, don't have to worry about people, lying to you over and over again with transitory, dropping the ball now on disinflation, and the next time that they're going to drop the ball is on the soft landing that they've been trying to pitch you for the last, God knows, like 6 months now. So the more trust they lose, the more trust is gained in crypto, in my opinion. But that's just me. If we look at Beyond, though, $1.37 billion still in market cap. This is still $1 billion company. That's absolutely ridiculous. Even though they're going to go bankrupt in the next year if they don't come up with, if they don't sell off their debt, they still have $1 billion market cap. That just shows you how much stupid money is still left in our system. If this company is still trading at $1 billion and they're going to go bankrupt in the next year, that's $1 billion of shareholder value that's going to basically capitulate. There will still be some value to the company, making $400 million a year. You would take the, enterprise value of it. I forget exactly what the formula is, but Yeah, that's just ridiculous. This is a billion-dollar company and they don't have enough cash to last them for another year. So beyond, I don't know if I would want to bet against the hype. Up 30% today doesn't mean that they can't continue to pump. We've seen bankrupt companies pump like no other. If you remember Hertz a couple of years ago, although that was, a different era of money printing, whereas now we're in fiscal tightening. But a call credit spread, if I were to take one, I would probably say that it would stay below. I'd probably want to raise my strike price to like 24, maybe 25. So you got some resistance right around here, this mark right here at 23.23. But I would probably go a couple strike prices higher just to put the odds a little bit further in your favor. So 25, 26 call credit spreads might be a decent idea. But right now you're trading against the trend. It's up 32%, which could end up making your out of the money credit spreads in the money very quickly. The problem is there's not good premiums on beyond options. That's shocking given that they're up 30%. With the calls, you would expect pretty decent premium, but I guess, if you go 24, 25, that's still another like 10% away. So that would reduce the premiums that you're getting on it. One piece of advice to analyze stocks for inexperienced traders: always look at the cash flow statement, especially right now. You want a company that's generating cash because cash is king in this economy. Whenever rates are going up, you don't want a company that has a shit ton of debt because that means that they're going to be paying more money in order to service their debt or in order to pay off their debt. So you want a company that has enough cash in order to pay off their debt and that is generating cash in order to pay off their debts. Because when interest rates go up, again, they're going to pay more to service that. And in order to grow a business, sometimes you have to take out debt. Preferably, you want a company that doesn't have to take out debt, though, in order to grow their business. So you want a company that has a high cash balance, that has positive free cash flow. So what free cash flow is how much money they're making from the business itself. And then you're going to see cash from investing activities, and then you'll see cash from financing activities or something like that. I forget. But you want to focus on cash from operating activities. That is the number one most important thing, and you want to look at the net income of the company. If they're not making money in this, era of fiscal tightening, it's not a company I would want to invest in. So look through their SEC filings, and if they're not making money off the business itself, not something that I would invest in. But let me get out of this call credit spread for SPY. Not really. I don't think that I need to, but $6 isn't going to kill me. And lucky me, I actually got out at $3. So that was a good trade. Made $72 in profit there. Let me go and post it to the trade alerts. And if y'all want to see what options I'm trading whenever I'm not in my live sessions, I usually make 1 or 2 trades at around 3 o'clock. If y'all want to see those, make sure to sign up for the premium Discord linked in the pinned comment here in the live chat. But let's see. Closing options alert. Looks like my emojis aren't working, but that's okay. Just took profits on the 404, 405 SPY call credit spread that expires today, 2/24, and I got out at 1 cent a piece. Originally, I picked those up at, let's see, 404, 405 strike prices. I originally picked those up at 25 cents a piece yesterday, so 72 profit. Originally opened 3 at 25, 72 profit. just compared Aries fill price with Thinkorswim, prices were better and there's no commission. Yeah, exactly. And that's why I prefer Aries to any other broker, but I can't use it because I don't have enough money in my account right now. So hopefully we can make this bread with trading on Robinhood and then move that money over there. But yeah, this might end up being a decent day for me. I think that I might get weighed down from the Nvidia trade that I made earlier in the week, plus the Walmart trade. Might come in slightly negative today, so that'll be the second negative day if I do end up taking a loss. But heading over to the February log, the trade that I opened yesterday, which I did not put in the open price. 223, close that today. 224, SPY, call, credit, which is a bearish neutral strategy. Expiration date was today, 224, and I did not let that expire. I closed it myself. Strike prices were 405, 404. I opened 3, 25 credit each, 1 cent to close for 72 profit. Let's see if I'm missing any other trades that I made yesterday. I think I only opened 1, but always good to double check. The Nvidia trade I might want to close out of now. I think Nvidia's back to 230, so that could be a support. We'll head on over here. Nvidia 231.29, so it did, whoops, Nvidia, not Nvidia. 231, so it did end up bouncing on that 230.62 level that I'm watching. Currently up by a whopping $9 for the trade. They're going for $131 a piece when I bought them at $122. This trade is really on the fence here. Let's see. SPY is trading at 394 and some change, 394.50 basically. I don't know. It's already fallen 1.5%. I could see us maybe falling another 0.5% to down 2% for the day. We did have a down 2% day on Monday. So I would think that that might be a little bit more likely now, but that would lead us down another $2 to 392, which is right around that mother of all trend lines. I don't think that we're going to reach that low today, but you know, we could always, anything can happen in this market. This is a wild, wild west out here. Got $14 of profit on the trade so far. Let's see. Walmart trade. I'll make sure that that gets logged in as a max loss. This one expired. And it's going to be max, which would be the difference between the strike price is $1. Let me drag this. There we go. For a 240 loss. So that was a pretty rough loss. Assuming that Walmart would hold up. But not the case for us, unfortunately. And now it's trading in that range of the bottom end of the risk range, 139.50 to 142 for today. So our strike price was 145, assuming that it would be above that. So that one definitely big L. But hopefully we can make it back with this Nvidia trade. Coming back to test 230.62. Just below it at 230.40. So if we get a decent close below it, we might end up actually sinking Nvidia. Maybe. We'll see. I'm surprised that these aren't trading for more. Usually whenever it's trading at that the 230 strike price, you would think that it would trade for 60% of the value of the spread, which would be 60 times 250, 150 a piece. I guess it is close to that. And in order to really sink it, or in order to really increase the value of it, you would have to go to like 229 or below, but not quite there. Do I think SPY will have some consolidation on the upside for Monday since it seems overextended, unless this is judging from high inflation rates? I think that the next few weeks, honestly, could be pretty rough for the market. I don't know if we'll consolidate next week. But after this PCE report coming in higher with the year-over-year reading, that shows that the disinflation process is basically on pause. And interest rates are going to have to go up with that. You're going to see the odds of 50 basis points continuing to climb. So not really sure if we'll see consolidation. If you do get consolidation, I would think that the markets might hesitate to go below that mother of all trend lines. So if you're looking out to next week, you're looking at a price between like 391 and a low of, let's see what the end of next week is, the 3rd. So 391 and 389. So if we do end up kind of hesitating, we might end up above 389 for next week. That's what I would be probably focused on, would be that mother of all trend lines being back in play now. I would also be watching for the Fibonacci levels stemming from the COVID lows right here. Do the Fibonacci retracement to the bull market highs of 479.98. And the next Fibonacci level down is $380. We ended up basically topping at that 418.21 Fibonacci level. Everybody sold as soon as it hit that. So if this trend does continue down, we could be down to the 380s within the next, let's see, that would be April 17th. So that would be 2 months out. Question, do you know if there's a platform where you can trade options without having a minimum account in one? For example, Webull, you have to have 2,000. The reason why you have to have 2,000 is due to having a margin account. So that is the margin requirement to have 2,000 in your account. You could switch over maybe to a cash account and have less than 2,000. But that means that you'll have to wait for your buying power to hit your account after you've used it. The trade plus another day. So if I close a trade today that's holding, say, $500 of buying power, in order to get that $500 back, I have to wait another day. So you can probably trade options with a cash account. But if you want to trade spread options, you need a margin account. So you would need that $2,000 balance at least. Can you sell options on a cash account? Yes, you can. You can do level 2 options trading with cash account, but you can't do level 3 and up. So no spreads and no naked options with a cash account. Since Cisco is a technology-based company and moves with SPY, would you say buy Coca-Cola? I would say Coca-Cola would be a decent place to put your money, yeah. Coca-Cola is down only 1% today. This is the COVID charts. Peaked at $60.26. How much has their earnings grown from pre-COVID. 44-cent earnings, 56-cent earnings, 63-cent earnings. Now they're doing 47, 69, 70, so a little bit higher in the earnings per share. I think that their earnings is going to continue to go up. Again, this is a low-price product, which means that they can continue to raise their prices more than other businesses that are already charging a high rate. For example, like with my Discord, I'm charging $30 a month. It would be harder for me to go from charging $30 a month to $50 a month than it would be for Coca-Cola to go from selling a $3 2-liter of Coca-Cola to a $5 Coca-Cola. $5 2-liter of Coca-Cola, if that makes sense. Like, it's more affordable, which means that they have more earnings power, basically. Thank you, Willie. Nvidia is finally below $230. $230.04. Dip below it for a second. Now these are trading at $145 a piece. God dang it. This bid-ask spread is brutal too. 134, 152 bid-ask spread. SPY is still managing to hold that 394.50 low. Actually, it's 394.10. It's down 1.5% today. Again, I think that there's a possibility that it does hit down 2% today. But the odds of it, I would say, are pretty low. I would say like a 10% chance that we go that low. You've already seen a decent sell-off coming into the inflation report, so that kind of minimizes the impact a little bit. Is the morning the best time to trade or wait in order to see the trend? Most of the profits that I've been making recently have been overnight trades, so I'll make the trade at 3 p.m., hold it overnight until 9 o'clock. But the problem, if you do that and you're wrong about your trade, is you can lose more money, right? So say I open that call credit spread assuming SPY would be below 404, right? That was my assumption. And the inflation report actually came in good today, and we rallied 1.5% instead of falling 1.5%. Right? We closed at $401-ish. You multiply that by 1.015. SPY would be at $407, and I would have taken my max loss for that trade instead of my max profit. So if you do take overnight trades like I've been trading recently, you better be freaking right. I'm not always right too. Like my win rate for February has been, 68%. Last month for January was 50%, but trying to get as close to 70, 80% as possible. That's really my sweet spot whenever it comes to my earnings. As long as I'm close to 70, I usually make more profits, but if it's closer to 50, for me, that usually ends up in losses. So if you look at my January log, I ended up losing $600, whereas in February, so far, today's the last day, I've made, I think, $1,200. Oh, no. Haven't updated the spreadsheet to reflect. 224 expiration. All right. So down 318. I know I lost 200 from Walmart. Where's the other few hundred coming from? 240 on Walmart. The Nvidia call credit spread, so that one I lost big on, but could make some of that back with the put debit spread, assuming under 230. Right now, it's just catching a bid again and again at 230. And SPY is just hanging in that range of high 394. So Mike could get out of this trade with a small $20 profit. And we could maybe open another trade for today. SPY trading at 394.50. Let's check what the maximum pain is. I don't know if the maximum pain is going to be very relevant today, considering how far we've dropped. I'd imagine that the maximum pain would be pretty far from where we're trading right now, but the market makers could push for that later on today. So the maximum pain for today's expiration is 402. So considering that we're 402 minus 394, 8 points away, 2% away from that, very low likelihood that we make our way back up to 402. So the max pain for today, I think, would be irrelevant. Couldn't really make a trade on that. Maybe we can make a trade assuming that we're going to stay above 392, if that pays a decent credit. So that's the mother of all trend lines that I don't expect us to hit today, but anything is possible with this market. So probably going to risk very little for the option. Maybe even do an iron condor. That would reduce our risk a little bit. Have we had any Fed members coming out and speaking today? It doesn't look like it. That's what I would be kind of worried about with the downside, especially after this high inflation report. If they come in saying, oh, we wish we would have done 50, like we saw with a couple of Fed members, then that could end up capitulating us below 392. Right now, that 392 put credit spread is paying us 21 cents. So not a bad trade as of right now. I want to get probably 25 cents out of it, but we'd have to drop a little bit more. Took a loss on Adobe, didn't know drop after hours. Yeah. Basically everything got clobbered in the after hours. Even like before the inflation report came out, we were down like 0.75%. So I wonder if somebody already knew that we would have a bad inflation report. Good morning, Peter. Yeah, I think that you could get a 2% sell-off if the Fed members come in more hawkish than expected today, and that there's a good possibility of that happening considering this high inflation report. Let's see. Economic calendars. Let's see who's speaking today. Core PCE, that's already in the bag. You had Fed Mester speaking right now, actually. We might be able to listen to her. She was already in favor of doing a 50 basis points for the last meeting, and then you also have Governor Jefferson speaking right now. So those two might end up sending the markets down, considering that they're both speaking right now. So we'll have to see what their commentary is right here. We might even be able to pull up Fed speech calendar. Might be able to pull them up and watch them live. Nope. Today is February 24th, so we got to keep on scrolling. February 24th. There we go. So Governor Phillip is talking about the discussion of the papers managing disinflation. Ooh, that's actually a good speech to listen to. They don't have the link for it. That's unfortunate. I really want to listen to that speech. There we go. Governor Phillip. Maybe we can watch this. Meeting is scheduled for the 27th. God dang it. What the hell? Okay, well, I guess we're just going to have to read it instead of watching. That's unfortunate. Do I have any videos for Aries on my YouTube channel? Not yet. Been wanting to make them. Probably going to make an Aries tutorial and a Thinkorswim tutorial people have been asking for, so I'll try to work on those. right now. Taking care of the baby at the moment, so that's keeping me pretty busy. But I'll try to work on them probably in the next week or two. Did I say Lyft was going to go bankrupt? Yes. The odds of Lyft going bankrupt is definitely increasing. They're down 4.5% today. So with the rising interest rates, that puts them at a disadvantage. They're almost trading at the yearly lows. Not too shocking. The reason why I think they're going to go bankrupt again is just because their free cash flow statement. They're burning more money than they're able to make, and they don't have that much cash left. Nvidia's still holding that 230 mark. Nobody wants to sell below 230. I don't know why. Everybody is just holding on for dear life to Nvidia at 230. SPY is trading at 393.90. So that 392 put credit spread is looking all that more attractive at 23 cents a piece. I might bite. They just dropped down to 20 at the bid. Great. And now Nvidia is ramping up with SPY bouncing. Tisk tisk. Gotta have quicker hands than that. All right, let's pull Robinhood back up. Keep watching for SPY, see if we get any updates from the Fed members. Fed Jefferson says ongoing imbalance between supply and demand for labor suggests high inflation may come down only slowly. Surprise, surprise. Who would have thought that higher wages means higher prices overall? That's what you call a wage price spiral. But the Fed's not worried about the wage price spiral yet. Any good swings going into next week? Let's see what events we got going on. I think we could end up maybe bouncing early next week with that mother of all trend lines. That could be a decent trade opportunity compared to the one that I'm looking at right now. It's only paying 22 cents to assume that we're going to stay above the mother of all trend lines. It could happen. I just wouldn't want to put a lot of money on it. Let's see. Especially with the Fed members speaking at the moment, that could end up capitulating the market depending on what they say. I really wish that they would speed up the rate of interest rate hikes. That would be ideal scenario, but the Fed is just so incompetent at this point. They're too scared to raise interest rates quickly. All right, I opened the put credit spread. I only opened a couple of them, so very minimal risk that I put on for this trade. New options alert. Premium. This is a day trade. Just opened a new SPY put credit spread expiring today, the 24th, and I got them at 23 each. Strike prices, assuming it's going to stay above 402. And of course, that's a day trade because it expires today. The put debit spread that I opened was going for, Jesus Christ, 52 cents a piece earlier. That's pretty high. Let's check it. That Nvidia is just holding that 230 mark for dear life, man. That's crazy. Crazy that anybody would want to buy Nvidia at $230 when it was trading at the same price last year, and their revenue, earnings, and everything is down so freaking bad. But the markets can stay irrational as long as you can stay solvent. Always remember that. All right, the put debit spread that I have is up 144. Not worth taking profits in my opinion. Maybe till next week. And then that put credit spread that I just opened, up a whopping $4 on the bounce again for SPY. There's a lot of volume coming in today. The volume is not stopping at all. Relentless. Let's see if Fed Jefferson has anything else to say. Fed Jefferson speech live. Where are you, Fed Jefferson? Nope, I'm not seeing nothing. Well, that sucks. Trying to find good swing trades because my account's under 25. If I can't do put or call debit spreads, what do I recommend best? Let's see. Well, I think if you want to do swings, you probably want to extend your expiration date out at least a couple of weeks, like 2-3 weeks. So I would say right now, the risk is to the downside, but I'm not sure if it'll go down that much. So you got to look at implied volatility and see if you're overpaying for put options. Right now, the VIX is trading at 23. I think that it could probably head to 24, 25 over the next month. So you might be able to pick up some cheap puts that expire maybe on the March expiration date on 3/17. And strike price, that I would have a little bit of trouble picking for you. Maybe saying that it'll be below 390. Right now you're trading at 394. That would be out of the money. Maybe if you have more money to spend, I would say choose 395 or 400 puts. And then if you don't have as much money, I would think that it might be able to tag that 380 Fibonacci level. So if you buy a 390 put option expiring March 17th, that would have $10 of intrinsic value. So if you look at options expiring for next month, the 17th of March, assuming that we're going to go to 380 at the Fibonacci, if we cross the mother of all trend lines, you're looking at paying $595, $630 in order to potentially get $1,000 out of it. So about a 50% profit potential if that trade ends up working out. Obviously, could end up not working out and you would lose $600. So do keep that in mind if that's too much for you to risk. Yep. I did type the wrong strike prices here. There we go. Yeah, SPY's just kind of wanted to bounce at that 394 level, kind of catching a bid, a balance right around there. The Federal Reserve will be hard-pressed to lower inflation without significant blow to the U.S. economic activity and a sharp rise in unemployment. And even then, they might miss 2% inflation target for years to come. Jeez. Somebody has a vendetta. Cleveland Fed Loretta says that the economy does end up in a recession in most disinflations. Ha! Finally, one of the Fed members admits that we're going to get a recession. That's the first time that I've heard any of these Fed members mention the possibility that we could get a recession. Yeah, that is part of the disinflation process, is destroying demand. Either you destroy demand enough to where prices end up coming down because people can't afford it because they're laid off, or their savings has been drained, or you destroy demand or you increase the supply chains. And right now our supply chains are being shocked by COVID still at this point because we're deglobalizing, right? So we relied so much on China, we relied so much on the rest of the world, and now we're basically reversing what we've done over the last 30, 40 years in terms of globalization, which means that we're more reliant on our own supply chains, which we know are getting worse. If you look at the Fed Philly manufacturing reports, all of them have been coming in negative. So we're deglobalizing, and our own supply chains are getting worse. So the only way to combat inflation is destroying demand, which means that you are going to get a recession. So I'm glad that Loretta finally woke up to that possibility. Man, Nvidia is just killing me. The anticipation is killing me with Nvidia. I think I'm just going to have to get out. Let's check the studies. Maybe I can convince myself with RSI or something. Yeah, it's below 50 RSI. Can't make its way back up to 50, so we could end up getting the drop. I don't know. There's just so much support at 230 and then that 230.62 level. Really makes me question this trade. I guess we do have a counterbalance with the SPY put credit spread, though. So if Nvidia does end up holding, that probably means that SPY didn't drop any further. Kind of wish that I got more credit with the put credit spreads. I opened 2 of them for $150 in risk to make $65, and I'm risking $150 with the Nvidia. $125 actually. I could open a couple more of the put credit spreads, but then I risk, let's see, 100 minus 22, I guess we'll call it 75 risk for 4. Then I risk 400 to the downside, and then 150 to the upside. I'd rather just keep it as is. Risk 150 both ways. How do I make trades with $300? Well, let's see. This 232 to 230 put debit spread cost me 122, so I didn't pay a lot there. This Nvidia call credit spread, I opened just one of them for let's see, 100 credits, so I risked 250. Nvidia, this put debit spread, I ended up risking. So this one I actually put a little bit more down, probably more than I should have. $282 that I paid in debit to assume that it would be 190. I bought that last month. And then let's see, the put credit spread that I opened, I got 46 credits for $200 of collateral, so that means that I'm risking 150. So none of these trades that I've opened are risking more than like 300. So I don't like putting a lot of risk down, personally, just because of how volatile the markets have been. I would rather lower my risk to below 300. You know, my usual how much money I'd put into options is like 7,000 roughly. I do have a 30,000 portfolio just to get over the 25K mark for pattern day trading. But you know, risking 300 of the 7,000 is about 4% a trade. So I try to keep my trades between like 2 and 5% of the options portfolio or options account size. Come on, reversal spy. Yeah, it's just kind of chilling at the moment. I mean, we are still down 1.7% now. And the trend is certainly down. I mean, we're just hanging at 30 RSI, right? So oversold for the better part of the last, let's see, since 3 a.m. Who even trades at 3 a.m.? That reminds me of that SpongeBob episode where, what is it, Patrick says, oh boy, 3 a.m. and then eats a hamburger. Like, who the hell is trading at 3 a.m., bro? Well, I guess international traders, maybe. What is my win rate using credit spreads? Well, let's check it. Head on over to my strategy stats. Credit spreads, I've made $62 in profit off of them. That doesn't make sense. This isn't adding up. Oh, I guess with January's trades. This is combining January and February, where I lost 500 January. So I've made most of my money on iron condors. $305 in profit there. Win rate 63.8%. With the iron condor 67%. Iron butterfly 33%. So that one's the lowest of all of these. Debit spreads 52%. And then long put options, I've only opened like 3 of them. 1, 2, so that's 67%. Alright, SPY might be making its way back up to 395. Maybe. Put credit spread we open for SPY. Currently up at $10. I can buy myself a what used to be a $5 foot long. I don't know. Is a foot long $10 now? Is it $12? I guess it depends on the which subway you go to. But yeah, up a little bit here, and it's just hanging at that 394 mark. It doesn't want to go up or down at that. Two for one. Let's see. Reversal for SPY, maybe a put credit spread. I've already opened a put credit spread, assuming it's going to be above 392, but that's based on the mother of all trend lines for me. I snagged that at about the same price that it's going for right now. So if you want to take that trade, I probably wouldn't put a lot of risk on it, just in case the markets get pressured down by the Federal Reserve speakers that are talking right now. Wouldn't put too much risk on the trade. And I guess more and more people would be looking at that mother of all trend lines since we're getting close to it. So you might get a battle around it too. Might even open a call credit spread to make it into an iron condor. Inflation report, we were trading at 397. Right now we're trading at 394. That would be $3 above where we're trading right now. I could see us maybe climbing 0.75%. Let's see. So wouldn't want to put a lot of risk on that either, but say we assume it's going to stay below where it was pre-inflation report. We get paid a whopping $7 in credit. Not worth it to me. No thanks. Yeah, so 397 would be a good point to assume that it would be below, but if you're only getting $8 in credit for $100 of collateral, that's dog shit. Oh, I found another app that's been really good for finding news if y'all want to check it out. It's called FinTalk. FINTOK. FinTalk. And they have general news, just macro news, and then they have stock-specific news. So I found a lot of the news here that I haven't found on Thinkorswim, so they seem to be a little bit better if you want a better place to find your news. So FinTalk, FINTOK. Do you know if there's any commissions for index options for Aries? I think that they do charge commissions for trading S&P minis. So yeah, if you're trading ES or if you're trading NQ, then you will get charged for that. But for regular SPY or QQQ, you won't get charged for that. All right, so what I'm reading off of FinTalk right now, some more news that we didn't get on Thinkorswim, actually. Some from the Jefferson speech. He said the Fed's credibility is higher now than the 1960s and 1970s. Really? That's interesting. Inflation is driven by many factors not seen historically. That's pretty obvious. Mester said that she sees inflation risk as tilted to the upside. So that means that she's definitely going to be in favor of the 50 basis point rate hike. And then Mester says economy does end up in recession in most disinflation cycles. So she's calling for possible recession, and she's saying that she's probably going to raise rates more. And she's been the first Fed member that said that there's a possibility of recession. So that I would think would be pretty troubling for the market. Mester also said peak rate matters more than meeting-to-meeting moves. So she might be actually coming back from that 50 basis point. That might be a way to manage expectations for the next meeting a little bit. Other than that, not really much news that's coming out. Deutsche Bank says staff banned from using ChatGPT. Oh man, the financial analysts can't use ChatGPT to write their reports. I don't think that ChatGPT can even let you write things about finances. Usually, like if you're trying to ask ChatGPT if you should buy or sell a stock, it's going to tell you I can't give financial advice. So I don't know why Deutsche Bank would be banning their staff from using ChatGPT, but that's funny. Biden says U.S. has more progress on inflation, more work to do. Fed swaps price in peak policy at 5.45% for July 2023. Jesus Christ. That is tough stuff, man. So the peak rate is where the Fed is expected to stop raising interest rates. So if we go to the FOMC countdown tool, at the next meeting, they're expected to do 25 basis point rate hike, but there's still a 30% chance of them doing a 50 basis point rate hike. This morning, this was at almost 40%, so that has actually pulled back from this morning. And then if you look at July, the one that they were quoting, it's supposed to be 5.25 to 5.5, and then a 29% chance of 5.5 to 5.75. So the odds of going to 5.5 to 5.75 rose from 26% to 29%, so a small rise, but a rise nonetheless. But odds are on the 5.25 to 5.5% as of right now. The way to hedge against the iron or spread going against you, you turn it into an iron condor. Yeah, that's one way to hedge your position. Just because you get more credit out of it, that's going to reduce your overall exposure, basically, your risk. So if you get an extra $9 in credit, that's another $9 that you can't lose, basically. That water tasted old. Crusty water. We might have just got a double bounce at 393.78. Potentially. All right, back to Robinhood. We are just stabilizing for the most part. All right, I guess I'll just take profits on this, even though they're small. I'd say we're hard pressed to go above 232.50, but if the markets do end up rising, say to 395, 396, I could see Nvidia getting a decent rally out of it. Let's see. Maybe we try to close closer to 50 RSI, so maybe I wait this out a little bit more. We did end up tagging 50 RSI in the early market at 940, so we could wait until it hits 50. Instead of an iron condor, I could open a call credit spread and a put credit spread separately. But the collateral, yeah, so you're only using the collateral from one credit spread, right? So if I assume that SPY is going to stay below 396 with a call credit spread and then stay above 392 with a put credit spread, SPY can't be both above $396 and below $392 at the same time. So therefore, I'm using the same collateral between both the trades. What's a good call credit spread strike price for Tesla? Tesla, TSLA, trading at 195 right now. I can't believe the stock is still damn near $200. $200 is definitely going to be a point of contention. You could use that. It is pretty close to where it's trading right now, so that would be a little bit worrisome. Let's see. 205 would be pretty decent. March 10th expiration, you're giving that 3 weeks until expiration. That's a long time to wait for a call credit spread. But if you want to play it on the safe side, I would say probably 212.50, 215 strike prices. Yeah, I mean, you can set target percentages for credit spreads, debit spreads, but I personally do it on a trade by trade basis. So I don't have like take profits at 20%, take profits at 30% or whatever. I mean, if I wanted to do that, I would just create an algorithm that would do that for me. I do it on a trade by trade basis. I don't think that stop losses and take profit percentages are very useful for people that actually trade. If you're actually monitoring the markets, then there's no need for them. There's an event on March 1st for Tesla. Usually on their big events, they end up dropping a shit ton. If you remember Battery Day, if you remember the AI Day or whatever that they had last year, basically any of their big events usually end up selling off. They get overhyped, and the actual event doesn't really amount to much. So Dixie is getting rejected right now. Let's see. DXY. Yeah, you could also wait right before the event and probably get a better price, maybe. Let's see. Dixie is trading at 105.20 versus a high at 105.32. So if this keeps going up, that means that the markets are going to feel more pain. So if you're watching the fundamentals, watch for VIX, watch for TNX, watch for Dixie. If the Dixie heads higher, that ends up sending stocks down. If the 10-year heads higher, that usually increases the Dixie again, sends stocks down. And then the VIX trades inverse with the market, where whenever volatility is rising, stocks are usually falling. Sometimes you'll see both the VIX and the stock market rising at the same time. That's what you call convergence. It's very rare, and usually when that does happen, that's a signal to get out of the market. But not seeing convergence right now. Definitely seeing divergence, I guess. VIX up 7%, 8% almost. SPY down 1.7. The market does exactly what I don't want it to do. Yeah. It do be like that sometimes, especially with me with that Walmart trade that freaking sucked. Like, you just gotta spread yourself across multiple trades. You can't be all in on one side or the other, right? If you're all bearish and then the markets end up going up, you're gonna lose money. If you're all bullish and then markets go down, you're gonna lose your money. But if you can diversify, say like I have with this Nvidia put debit spread plus the SPY call or put credit spread, that means I'm assuming that SPY will go up, but Nvidia will drop. So on one side of this trade, or on one side of these two trades, I'm bound to make money, right? So diversify your portfolio, hedge your portfolio, and you'll probably end up better off. What platform am I looking at right now? This is Thinkorswim, and then I use Robinhood in order to execute my trades, which Robinhood definitely doesn't have the best execution. The prices for their options are usually shit. So I wouldn't recommend trading with Robinhood, but they are the easiest to use. So if you are a beginner, you'll pay your market tuition with the bid-ask spread on Robinhood. But I've been using it for 3 years at this point, or actually 6 years at this point. So just kind of got used to it. It's like a bad drug that I can't wean off of. All right, we're getting $40 in profit now, with the potential to make 250 minus 122 could make 128 for this. I think I might take profits once I hit, I'd say $60 in profit. So once these are trading for roughly 180 a piece, I might get out then. Not in favor of Weeble. What about Moomoo? So the reason why I don't like Weeble or Moomoo is because they're both Chinese owned, and I don't want to take the risk of US and China getting into it further, and then China deciding that they're going to shut off their trading platforms. So I just would rather not risk that, and I wouldn't trade with Weeble or Moomoo accordingly. SPY might be bouncing again right around that 390, 385 mark. So that's the daily low that it just wants to keep bouncing off of. It's getting close to oversold. Doesn't mean that it's going to bounce. But yeah, that 393, 85 market just wants to keep on balancing above, and then it's not really going much above like 394.50. That would be a very tight range, like a 75-cent range that it would be in. I'd say that's pretty unlikely, but coming back to the price level, it's just kind of a slow burn today. But that's good with the put credit spread. As long as this is a slow burn and not a jerk sell-off, then that means that we can make money off the theta value decrease in the values options, which sends the credit spread to zero, making max profit. All right, these are going for 160 now. They're a little bit more appealing at 160. Still want to try to get out at 180, but I don't know. Kind of dependent on SPY and that daily low if we break it or not. More news with Secretary of State Blinken. UN Security Council meeting on Ukraine says we must push for a just and durable peace. How about we stop sending weapons over to Ukraine? That would probably be a little bit better than continuing to provoke Putin, but that's my take on it. Federal Reserve will be hard-pressed. I think the reason why we're so adamant about Ukraine, though, which is a good reason, is because they're the breadbasket of Europe, and usually, like, overall, they're the greatest exporter of grains. So it's important that we don't let, Putin control that, because then he has basically the U.S. supply of food and the European supply of food, the Western supply of food in his hands, which not exactly a great place to be when you have such a authoritarian leader. Footlongs going to around $8 to $9 in New York. Actually, that's not too bad. I would have expected a little bit more. What do I think of BBBY? Meme stocks are probably going to get crushed in the next couple of months. It's already down at 155 versus a low of 127. Earnings power is depreciating like hell. I'm pretty sure they filed for bankruptcy recently, so yeah, I definitely wouldn't want to put my money into this stock. If I did, probably take the short side. Maybe assume that it's going to stay below like 250 by, I don't know, April or something like that. That's how I'd play it. Yeah, Fintok is the app. Fintok. Let me see if I can get the link for the app. And I'm not talking about like TikTok. The financial side of TikTok is definitely not a good place to get your news from. But yeah, Fintok the app. No, do not get your news from Fintok. I was watching this girl on Fintok, financial TikTok earlier, talking about how we shouldn't be raising interest rates because it ruins equity, or promotes inequity. We'll talk about that. Let me link this first very quick. When it's really, I think, the opposite. Where is my live session? There we go. Okay. Yeah, so this is the app. It's called Fintok. It's a terrible name, but good place to get your news from. But yeah, she was talking about how the rising of interest rates is creating inequity, when the real issue of inequity is the people that can't afford to buy goods because inflation is rising so high. Whereas on the other side of the spectrum, all the people that have been making a shit ton of money based on the low interest rates, all the people that invested in stocks over the last 10 years and bought homes that have appreciated, God knows how much over the last 10 years, those people are going to, feel the pain more than the people that are living paycheck to paycheck already and can't afford food. They can't afford to put food on their table, or they can't afford the rent anymore. It's going to hurt the people on the other side of the spectrum a lot more. Although you are going to see layoffs, of course, that's an inevitable part of it, but long term, it would promote equity rather than make it worse. Any thought on Google options? Google's almost trading at a yearly low. $88. I think that tech has had a good run, over the last few years, especially since COVID. They're doing less earnings per share now than they were. Well, that's based on the 20 to 1 stock split, so you'd have to divide these numbers by 20. So before COVID, they were doing about 50-cent earnings per share, 75-cent earnings per share, 75-cent earnings per share. So they definitely increased their earnings power, which is good. But the potential problem with Google is that they've become such a matured company, and you have to ask yourself, how much more growth do they have available to them? Right? They already have YouTube, which I think that YouTube still has the potential to grow in terms of the number of creators coming online, and I hope that the new CEO can, promote individual creators rather than mainstream media. Like, it's ridiculous that, like, whenever you go to YouTube's front page, you're always going to see the mainstream media. Like, nobody watches the mainstream media anymore. Everybody is losing trust in the mainstream media, but they still promote them. So if they stop promoting them, I'm sure they're probably getting money from promoting them, but if they would cater to individual creators rather than to mainstream media, I think that could give them a growth opportunity. But you have to see that pivot in order to get the growth. Have I used margins trading or short stocks? Yes, I was using margin last year in order to buy up shares of AMD. I was using cover calls, so I was basically using the wheel strategy. I wouldn't recommend doing margin right now, though, just because how heavy stocks are selling off. You don't want to get margin called. And the more stocks fall, the greater chance that you have of getting margin called. Unless you're, smart enough to have the right stock picks. If you're not putting your money into high growth, probably ideal. Better to put your money into things like, again, like Coca-Cola, your staples, companies that still have earnings power available to them. They can raise their prices because they have low price products. Whereas the end of the growth period, I feel like, is coming to a stall. Or I guess the growth period is coming to a stall. What is the best trading strategy for income in a bear market or a recession? I would say credit spreads, but it's not like a consistent way of making income, right? Because you're going to take losses. I take losses on about a third of my trades, but as long as you can try to keep your win rate higher, keep your losses small, that will benefit you. But if you want like passive income in a bear market, I would say that's pretty hard to come by. Go all in for Doge. I've got 10,000 coins of Doge, personally. I think Apple has no business making a car. I think that is probably the dumbest thing they could do. The cost of making a car is way too high. If they do make a car, I would want them to outsource it to somebody else. Like outsource it to Hyundai, outsource it to somebody that's already been making cars for decades, rather than spending the money building the infrastructure to make vehicles and taking that high upfront cost of producing vehicles. Like, producing vehicles is freaking expensive, and especially in the beginning. So I don't think that the Apple Car is a good opportunity. I do think, though, that Apple CarPlay is a good opportunity. I think that Apple CarPlay is genius. If they can put that into every single vehicle and they can monetize that somehow, yeah, that's a great idea. But if you're going to start making cars, it's too damn expensive. You're going to take a loss. Your shareholders aren't going to want to, hold through you taking losses of your company because you decided to join a new industry. Like, I think it's a terrible idea for them to make vehicles, but it is what it is. Well, yeah, Apple is the what would you call it? The I want to say love child. I don't know what. Like, it's the Apple of the market, right? Basically. It's been a great stock to hold for the last 5-10 years, but that doesn't mean that it's a great stock to hold for the next 5-10 years. I think, personally, that Apple has really lost its way in terms of innovating in new products, but, their 30% that they take off the top for the App Store, that was, a money printer for them. There's more pressure that's coming from legislators around that, so that could end up possibly making that a worse opportunity if legislatures crack down on it. But, there is ties between politics and these tech companies. There's money flowing back and forth between the two of them to where they pay them, they get off scotch-free, basically. But hopefully that doesn't continue. Hopefully we see politicians acting in the best interest of people instead of corporations, but not super promising. What do I think of Carvana? Obviously not healthy, but it's going bankrupt in the next 30 days. Yeah, I mean, Carvana's been in a very tough spot. It's already trading at $8.50 or $8, right? The lows was $3.55. And yeah, this company is probably going to go bankrupt pretty soon. I'm not sure about next 30 days. But yeah, it's down 20% today. Jesus Christ. Deutsche Bank is saying that you should hold your Carvana stock. Oh, Jesus Christ. Why would you hold a company that's going bankrupt. That makes no sense. The shareholders are always going to be the last ones to get paid out in bankruptcy. So that's a terrible, terrible take from Deutsch. Yeah, I think that, I don't know, it might have been oversold at 355, but if it's going bankrupt, I don't know, I would say it's probably going to go below $5 at least. Soros went long on Carvana. Oh my god. Why would somebody want to buy Carvana stock? Like, why would you buy a dying company? That makes no sense. New McChicken is $9.99. Oh, if that's the case, I'm leaving. I don't want to pay $10 for a McChicken, bro. That is way too much. Stock is going all in at tech, Microsoft, Google. Wish I had more money to buy some pie in these stocks. Not interested in Amazon, Apple, Meta. Meta has potential. I think if Meta can restore trust in their company, if Mark Zuckerberg stops getting himself into the courtrooms, then yeah, I think that Meta could actually be a good company. Or if they just got rid of Zuckerberg. Like, at this point, he's been CEO of the company for, what, 12 years? It doesn't make sense for him to continue to be the CEO. He's, like, lost credibility over the last decade because of how many times he's been in the courtroom. And just because his personality is just, I don't know, weird. He's a very odd person. I think that they should just oust Zuckerberg, and that would probably send their stock up, in my opinion. Like, he's not the greatest in terms of PR or public relations. What do I think of the coming days for SPY? Whoopsies. Did not mean to do that. SPY, I think it's probably going to be testing the mother of all trend lines for the next week, so probably trading like 392 to about 389 for next week would be my guess. Put Zuck out to the pasture. Honestly, they need to get rid of him. Like, at some point, the CEO or the founder have to leave. At some point, they just become toxic to the company. You saw that with Uber. When did the Uber CEO leave? Like 2018 or something like that? Like, at some point, the CEO always gets too big-headed. They think that they're always right because they've been surrounded by yes men for God knows how long they've been at the company. And eventually they just have to go. They have to sever from the company. They can always move to like a chair seat or something, but remaining as CEO of the executive is usually not good long term. Yeah, you might be chasing Carvana puts, but if you extend the expiration date out to a decent length, then it's bound to go bankrupt, and probably next 3-6 months of you extend your expiration date, you'll still make profit on it. If I had $10,000 to invest, would I put it in a long-term put or would I put it in something else? I would hold it in cash. I love cash, personally. If I had to invest it, though, that's a hard one for me. You want a company that's free cash flow positive. You want a company that doesn't have a lot of debt. I don't know. My gut tells me a company that I've already been investing in, so I do have a bias here. Fulgent Genetics. But, this one is down from $60 to $30, so it's falling 50%. The trend is not your friend here. But this company is free cash flow positive, and they're one of the 2 companies in this industry that are free cash flow positive. So one of the 2 companies that's actually making money from the genetic testing business. Whereas other companies like Nvidia, PacBio have spent all their cash over the last couple of years trying to grow their business. Fulgent has been making cash. So I think if I had 10,000, I actually probably wouldn't spend it all on Fulgent. Maybe diversifying a bit. I don't know what other stocks that I would diversify into. Maybe a little bit more crypto, just because I don't believe in the central banks at this point. So I'd probably buy Fulgent, a little bit more of Bitcoin, and then maybe diversify into Ethereum and Doge. That would be my buys. Supply and demand zones, any advice for those? You just take like a range that it traded in for a while. So for Fulgent, we could take the highs that it was trading at, roughly 31.25, you would call it, maybe even 31.40. And then the lows were down yonder, roughly 29.25. So that would be a supply and demand zone, right? So if you're trading this, once it broke above that supply zone where people were selling it when it hit 31.50, then that would have been a chance to take a long position, and then buying it down at the lows. If it ended up going below this, though, say when it went to 28.50, that could have been a signal to sell out of it. Put all your cash into Shiba. Yeah. Oh, crap. All right. Well, looks like Nvidia isn't moving too much. I'm going to keep monitoring throughout the day. But I did stay a little extra for y'all, another 15 minutes. So I will call it a day here, and I will catch y'all Monday at 9:30 in the morning. See you, everybody.